Hello everyone, welcome to our seasonality webinar. It's a webinar that I tend to present every September because it's the worst. It tends to be the worst month traditionally for the markets. Actually, we can see this September that seasonality is still on this year as well. So it's all about seasonality today, how it applies to the Forex market. And it's a combination of actually I have used also Kathy Lien strategy. I'm going to demonstrate also Kathy Lien strategy on seasonality today, but first I want to explain what we mean seasonality and how it could affect the markets. So I have put the slides in a PDF format so you can download it from the handout section over there. You're free to ask anything you want. This is your session, so ask me anything you need. And okay, then until I have any feedback, I will, in regards to the audio and visual stuff, I'm gonna go through the disclaimer warning. So please, a quick feedback in regards to the sound and the screen will be very much appreciated. So this material is provided as a general market communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment leveraged products is characterized by a certain degree of uncertainty and that any investment of this nature involves a high level of risk for which the user is responsible and liable. We assume no liability for any loss arising made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading leveraged products such as Forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risk involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. Please read the full risk disclosure on our website, along with all the legal documentation that you might need. So thank you very much for the feedback, dear Omolu. Thank you very much. So I can move on. I will skip myself, and here we are. So what it is. So today we're gonna cover what seasonality is. We're gonna go through seasonality in some months. Okay, we can see September's, January's. I don't know why I put just January over here. Summer seasonality as well, and as I said, September and year-end seasonality. We're gonna see all together. Don't worry about it. We'll try to cover everything we can. Incorporate seasonality as well into your trading, and of course, any questions are more than welcome. So please stick them on the question box, and as soon as I saw them, I'm gonna reply ASAP. So let's move on. Okay, first of all, what it is. So okay. Either, I'm not sure, guys, whether who might be from you guys who might be a long-term trader or short-term trader or a long-term investor or short-term investor. I mean, because we offer investing in stocks as well. I mean, in HFM, it's not only about trading CFDs and derivatives. Also, we offer stocks, and you can literally invest in them and not trade them. So, whatever you are, trader, investor, long-term, short-term, etc., you should have in mind that out there, I mean, in general, in the markets, a lot of investors or traders tend to use a variety of methods in a bid to beat the market, right? This is what the aim is, I mean, to gain from the market. So you might already be familiar with some of the most popular methods of analysis, right? To be here with us, with me, at least watching our webinars, etc., you're definitely already familiar with fundamental analysis, technical analysis, sentiment analysis, okay? But there are also people that they make use of, in their analysis, they make use of seasonality patterns. So first of all, what is seasonality? When we say seasonality, we are referring to the regular and repeatable and predictable fluctuation or a pattern in price action of a particular asset class year after year, year after year. So it's a specific repetitive movement. It is a characteristic of the market that explains why the stock market in general and certain individual stocks, because it's something that we tend to see in stocks, by the way, either. So it's it is a characteristic of the market that explains why the stock market in general, or some individual stocks, as I was saying, tends to perform better during certain periods of the year. So in simple terms, seasonality refers to any pattern in price action, okay, that is repeated over 1 year period, okay? So on the price charts, your MT4, etc., the seasonality effect are different from the long-term trend. They are specific repetitive movements around the trend line which occur at a specific time of the year. So I will bear with me. I will explain what I mean. So you know that the forex market is more than 50 years old right now. Okay. So economists, analysts, etc., people who had the time to investigate over the years some reactions of the market. Okay, and they have identified what we call seasonality. So just to give an example, okay, in regards to the concept of seasonality. The concept of seasonality can be seen in many aspects of life, right? So let's take, for example, the food production. You may say, okay, Andrea, what is seasonality in food? Well, one of the most popular examples of seasonality is the weather, okay? And we know that the weather determines both the planting and harvest periods. Invariably, this affects the prices of those foods, of those assets, of those, or the stocks of relevant that are relevant with food, for example. Okay, so it is not just about food related stocks, though. Seasonality is seen also in other stocks. So for example, so can you see this little picture that I have? So in spring, okay, we have a peak of the food prices, okay, while in the winter, actually, Okay, no, let me give you a different example. So as I was saying, seasonality is all over the place, not only in food related stocks, but in general stocks. So I'm going to give you an example in regards to swimsuits. So let's assume that we have a company that sells swimming suits. Okay, so it is a company that sells swimsuits. It tends to have a lot of sales. The peak of its sales to be in the summer, right? But may not have a lot of sales during fall or winter, right? Because less people are going to the beach, so they don't need swimsuits. So the peak of their sales tend to be in the summer, and the low low level of their sales it tends to be in the fall and winter months. So this has as a result the company's stock to perform better during the summer than in the winter. Okay, so this is a kind of summer winter seasonality. The same thing, something similar with the example that I gave for swimsuit, or the food related, the food example in which we have planting periods and harvesting periods and etc. The same seasonality concept can be seen in the wider index market, wider stocks market. So for example, S&P 500, okay? S&P 500. S&P 500 tends to perform better in some particular months of the year. So over the years of the years of history that the market exists, that we have identified that historically some months have been shown historically to be consistently bullish and some consistently bearish. So for S&P 500, we have seen that the S&P 500 historically tends to move higher during April, July, and November. Okay, so so in general in Wall Street, we have some seasonality slacks. So we have the so-called January effect, or sell in May effect, or end of the year rally. Okay, I've put some over here. January effect, Santa Claus rally, Mark Twain effect, sell in May effect, sell in May go away, it's called end of the year rally, and etc. So because of the regularity of these seasonal patterns, some market participants, some traders, investors, etc., study the behavior of the financial instruments at different times of the year to see how they can exploit into their trading. So some assets tend to perform better during summer, while others perform better during other seasons of the year, May, April, November, whatever, etc. So however, just to clarify something, although seasonality patterns are quite regular and can be exploited, as with every other market pattern, it is not, they do not offer certainty, okay? So however, the correlation between the months or seasons of the year and the stock market performance is not a guarantee that the market will behave the same way in the future, but the percentage-wise, the possibilities are really, really, really high. And this has been proven over the years. So here I have a euro-dollar study from 1997 up to 2007. Okay, so at the end of 2007, this study, the study of euro-dollar, actually it was a study based only on the January's performance for euro-dollar between 1997 and 2007, okay? So basically, this study measured the change between the price of the pair of the euro dollar at the beginning of the month, the beginning of January, and at the end of the month, on the 31st. This study covers, I think, 11 years. Yes, 11 years. So as you can see, 9 out of 11 years in January, euro dollars was in a big loss. This is what we call seasonality, because according to the data, according to the study of euro dollar, there is a strong case of seasonality in euro dollar, and by the way, dollar Swiss. There is another, I'm not sure whether I put it on. Did I put, yes, dollar Swiss as well. And there's another one on dollar yen, but it's a vice versa scenario, and explain, I will come in a bit to that point. So according to the investigation, there is a strong case of seasonality in euro dollar in January, and it's a bearish seasonality. I mean, the euro dollar tends to be under pressure in January. So, and you can see that from our little chart over here. The biggest percentage loss was in 1997. Okay, so just a second, sorry. And if I'm not mistaken, we had the same path this year. We had also euro dollar in loss. Let me just go back in the beginning of the year. January 1st. January 1st. So we started here and it end the month 31st. Oh, actually it end the month pretty much unchanged. So we haven't seen the seasonality taking place this year. Interesting, very, very interesting. So just a bit of a pause over here. So yeah. So yeah, in 1997, it had the biggest, it posted one of the biggest percentage loss with a 7.9% decline. And the years that follow, you can see that, okay, the next year was a bit smoother, but 2 years and 3 years after, we had aggressive selling once again, and so on and so forth. So looking a little further back, the average loss between 1979 and 2007 was 1.2%. So beginning of the year positioning is the primary reason for this strong case of seasonality. Okay, and even though it does not happen 100%, right? It doesn't happen 100%. So you can see that in 2003 that it was in gain, in 2006 that it was on gain. This year that it was nearly zero, it was unchanged because it opened and closed really, really close to its open price, so pretty much unchanged. So even though seasonality is something that we should monitor because it doesn't happen 100% of the time, the fact that it has happened 80% of the time, right, is making it statistically significant. Okay, it's keeping on top of seasonality. I mean, to monitor the seasonality, to identify whether, oh, this year we're gonna see, it seems that, I don't know, you might check in euro dollar in January and you are in the mid of January and started a significant sell-off. So that's a sign that, oh, January might be once again bearish, and so on and so forth. So keeping on top of seasonality, it helps traders to focus on strategies where probabilities are in their favor. And I'm going to show you more seasonalities over here. So seasonalities in January is something that we have seen from dollar Swiss as well and dollar yen as well. So they are bullish. So dollar Swiss tends to rise more than 80% of the time. So it tends to be bullish, more of a more of an 80% of the time in January. The same stands for the dollar yen, which also it has less possibilities, but 72.7% of the time is in a bullish rally in January. Okay, this is what over the years the history shows, and actually this is something that we have seen also this year for Swiss and yen. So Swiss and yen, yes. So if I find where is it? Yeah, it's here. It is. So this is Swiss, guys. So it started the beginning of the year here, 0.91, and it closed the year here. That's the 31st of January. So you see, rally, and I think the same stands for yen. If I go back, January. What's the 1st of January? Here. Oh, no, it didn't. 31st. No, okay, unchanged. So basically open here and close slightly higher. Okay, it's unchanged like euro dollar. Yeah, but it's not just, I know that these are failed examples, but this is also a good excuse because I can say to you that, guys, okay, this is seasonality. It helps you to strengthen your strategy. From now onwards, though, even though if you know this knowledge, you have this knowledge, and you know that euro dollar, dollar Swiss, dollar again, euro dollar tends to be bearish in January, dollar Swiss and dollar again tends to be bullish in January. You have this in the back of your head, and you start monitoring the performance of these currency pairs. And if it's inversely, it is moving in a different direction, means that this year we won't gonna see seasonality happening. So it's still something that it will help you in your trading because you're gonna be able to take a different direction, right? So what else I wanted to mention? So yeah, seasonality is a strong knowledge. I mean, it's something that you should have at the back of your head, because if you prove from a technical perspective that this year euro will be bullish in January, or this year dollar Swiss will be bullish in January, etc., then if you combine this with technical analysis, okay, it will increase the possibilities to gain from the market. Okay, so seasonality may not be as strong in dollar yen, okay, because Japan has a different fiscal year end than the United States, okay. So fiscal year in Japan is in March, while in United States is actually in December, and which means that there will be less window dressing by Chinese corporation during the month of January, but it's there, so you need to start monitoring it. So aside from the euro dollar, dollar Swiss, and dollar yen now, there really is no seasonality in other currency pairs. These are the only one that they have proved over the years strong seasonality. Okay. Yeah, as I have posted in my slide, if I just as an example, if you're checking cable or Aussie or dollar CAD, etc., they don't have a significant seasonality. It's a 50-50 chance, so there is no seasonality statistically. So yeah, ignore these assets. So summer seasonality now. I don't know whether you find it interesting so far or not, but what the interesting part of seasonality for me at least is stocks. Okay, because we have a really strong significant seasonality possibilities in stocks. So, but I will take it slowly. We said that we're gonna cover all the aspects of seasonality. So, July and August. July and August, guys, is the peak of the summer, right? Are the peak months of the summer, and people are going into holidays. They don't want to spend money investing or trading. They want to spend their money, especially in August, to their holidays. So there is a less volatility usually in August. Okay, so so for the currency markets, the summer usually brings, as I said, less volatility, volatile price action, because people want to enjoy their vacation, especially the ones that they live in the northern hemisphere. So interestingly enough, these 2 months, so July, August, we have a unique case of seasonality for dollar yen and dollar cat. Okay, and why is that? This is mainly depends mainly on the increase of gasoline prices, because cars are used more frequently in vacations. So the stocks of oil refining companies benefit due to that. The hospitality firms also benefit because it's their season. It's the season that the people are booking holidays into fancy hotels and etc. So also the stocks that are related with hotels, with anything that has to do with traveling and vacation, they are benefiting. And also stocks of companies that offer air conditioning solution also tend to do better in summer, okay? Because of the vacation, companies that sell sunscreens, tanning products, and etc. Okay, so now I spoke about dollar yen and dollar cat. So other than all these companies and their stocks that benefit during summer holidays, we have seen a unique case of seasonality on dollar yen and dollar cat. So both currencies tend to, here we are, both currencies, where is it? Sorry, just a second. In both currency pairs, the dollar tends to rise in the month of July and give back its gains in August. So there is an up, a jump higher and a jump lower. This has been seen in this, in these charts over here. So we compare over here July and August for those two assets, and we have seen that they behave in the exact opposite direction in August than the direction that they were having in July. And there is a strong correlation, a strong seasonality. So dollar yen tends to rise in July and tends to drop in August. Dollar cat tends to rise in July and tends to drop in August. Sorry, that's supposed to be a cat, dollar cat. Sorry, a typo over here. And this is according to the study over the years, okay? And we can see that. So, okay, dollar yen. In 1997 we had seasonality, but 1998, so rise, loss, rise, loss, rise, loss, rise, loss, rise, loss, rise. So only 1, 2, 3 out of 11 months we had, well, of 11 years we didn't have this seasonality. For dollar cat, 1, 2. So 2 out of 11 years we didn't have this strong significant seasonality. And as I said, it has to do also with the it has to do with the holidays. Canadian dollar is correlated with oil, right? It has a strong correlation with oil. And as we said earlier, during the summer vacations, people tend to use their cars more often, so the oil is benefiting. They tend to there are a lot of flights around the world, and etc. So this is benefiting the Canadian dollar, okay, especially in August. Also, the performance of dollar CAD may be responsible for the reflection of the travel trend. So according to 2007 data from the Governmental Office of Travel and Tourism Industry, Canada is the #1 touristic generating country for the United States, followed by Mexico, United Kingdom, and Japan. So this might also be a reason for this seasonality trends that we have seen. So this is food for thought, okay, guys? But I want you to be careful. This doesn't mean that, oh, okay, I'm gonna go long in July on dollar yen, or I'm gonna go short on August in dollar yen because it's seasonality. No, you need to prove it technically as well. Monitor your price action and make sure that indeed seasonality is very, very likely this year, okay? I don't want you, I'm not saying all this information just to stick on them without critical thinking. Okay, is that clear? Okay, another case of seasonality, Aussie and Kiwi, they tend to perform together with the same direction. In May, so the dollar tends to strengthen against Aussie and Kiwi in May. Okay, and this has been seen with 2 out of 11 years, with 9 out of 11 years that it actually moved higher than these two currencies. So for Aussie, the currency pair managed to end the month of May higher only 2 out of 11 years. For Kiwi, fared slightly better, I managed to end in positive territory 3 out of 11 years. Okay, September seasonality in currency pairs still. Another strong case of seasonality, Swiss and cable in the month of September. So Swiss tends to be bearish in September, while cable tends to be bullish in September. Sorry for that. Okay, so as you can see over here, there is an overall dollar weakness in September. We tend to have a dollar weakness in September, and there is some seasonality in dollar Swiss cable, but not a significant seasonality on euro dollar. You might say, but Andrea, what are you saying? We don't have a dollar weakness this September. Yes, it seems that seasonality for dollar is not the case this September. You know what's going on around you. You know what is happening. It's like it's been 3 years of a complete roller coaster in the market. We don't know what to expect anymore. I mean, something new is coming. It was a pandemic. It was the war. It was a trade war as well. I mean, so dollar weakness, dollar seasonality weakness is not the case this September. Okay, but I am obliged to show you all that the seasonality cases scenarios that we have seen over the year to to be aware of them. So as I was saying, now another one, November, not a statistically significant one, but another one that has been seen over the years. Kiwi, New Zealand and dollar against dollar, so tends to, in November, tends to appreciate it, okay? Oops. Okay, let's move on. This was the final case of currency pairs seasonality. Although, as I said, it's not the statistically significant one. Okay, as I mean, if we compare it with the seasonality in months of May and September, the Kiwi, the New Zealand dollar, has managed to appreciate against the dollar 8 out of the past 11 years. So on the average, the appreciation was 1.9% only, which is the most, which for the most part is fairly, sorry, 90. What am I saying? So as I said, 8 out of 11, so it's 72% season, 72% chances for the Kiwi to appreciate in November, which is fairly significant number. The best way, however, to incorporate seasonality into your trading, it is to be simply mindful for it. For example, it may be better to look for opportunities to buy in the Kiwi in November or in month of November than to sell it. So seasonal traders do not always duplicate themselves, which is why trading seasonality blindly by buying at the beginning of the month and selling at the end of the month may not be the best thing to do. But what seasonality does teach us is where the probabilities are skewed. I'm going to repeat what I'm just said because it's the most important part of this webinar. I want you to carefully listen to me. Seasonal trades do not always duplicate themselves, okay? Which is why you shouldn't trade seasonality blindly by buying at the beginning of the month and selling at the end of the month. This is not the best thing to do. What is the best thing to do? And what is what seasonality teaches is where the probabilities are skewed. So be mindful. Try to find, if you know that, okay, November Kiwi tends to go up, then try to find opportunities to buy the Kiwi, not in the beginning of the month necessarily. Once you see it in price action, when you have done your technical analysis, you have seen that, there's a bullish bias, increasing bullish bias, so I could open long position so to go along with the seasonality, and I have also the indicators supporting this decision. Okay, so seasonality is there, guys. Okay, debates will always be whether as to whether the January effect holds any ground as an opportunity to exploit the market, or it's just the market rally with nothing special about it. Either way, you should strive to make informed choices because the markets, as stated earlier, are not efficient enough to guarantee consistency. You should also realize that while trends can help you predict a higher probability of certain outcome, performance can never be guaranteed. After all, There are tons of different factors at play, especially with something as unpredictable as the currency market and the stock market. So, although it's good to be mindful of seasonality, you should pay closer attention to evidence, to technical analysis, fundamental analysis, growth potential for a company, how profitable a company is over the last year. You need to judge yourself. You need to see, do a bit of a homework, check the fundamentals, the technical before taking any action, and have at the back of your head the seasonality as well. So as a clinical assistant professor of finance at New York University, Ms. Haran Sakram saying, she's saying this phrase: I'm a firm believer in the fundamentals of the stock, the cash flow, the risk, the growth, rather than the particular month to invest. This is what he said. So people do have an emotional connection with the money, but it's a patience game, okay? And all the experts over the years that they have been interviewing in regards to the seasonality, in regards to be mindful of seasonality, they have said that the best thing to do is have at the back of your head the seasonality, but do your appropriate risk management, monitor the trends, monitor the price action, because this will help you to take less risk. So although short term you might yield fewer returns, that thinking will pay off in the long haul, like slowly squirreling money away and letting it compound over the years. So make a regular, frequent contribution to your savings. That's the best approach to success. So taking a holistic view. And here we are, the end of our session. So that was a part of seasonality. I was thinking to add some more in the following months, because we have also, you know, in November is Black Friday, in December is the Christmas. So I'm gonna continue doing some seasonality related webinars until the year end, because I want to see together the strategies that could be applied in November, strategies that could be applied in December, in January, and etc. So yeah, that was just one part, a very tiny part of seasonality, because we mainly touch currency pairs and a bit of stocks, but nothing really other than that. But we have plenty of seasonality effects, especially the Santa Claus rally, the January effect. So I will try to include seasonality in the next schedule. Webinar schedule until the year end. So that was from me, guys, for today. So if you have any questions, now is the time to stick it on the question box. If not, I'm gonna call it a date, and you can contact me anytime you want, either via social media or sending me an email at webinars@hfm.com. It's me, Stuart, and in general our analysis team that replied to that email. On scale of 1 to 10, how effective are these data for day-to-day trading? Day-to-day, you're referring to, you're a medium-term trader, Diara Alavi, so you're mainly you're in a daily chart, and so medium-term. Not you don't refer to intraday basis, because for intraday basis this is not relevant. Okay. But if you're holding position for days, yes, this is absolutely relevant. But as I said, this is just knowledge. I don't want you to blindly follow the seasonality if your charts show something different. Am I clear? So if you are a medium and long-term trader, I mean, holding positions for days or sometimes weeks, yes, that's absolutely relevant. If you are an intraday day trader, 4 hour, 1 hour, no, that's not relevant. Yes, go for it. Tell me if I can help, why not? So sorry, it wasn't a very exciting class today. It was a lot of theory today. Yes, I will wait for your questions, okay? I will leave you time to type them. All the rest, guys, if you're still here, if you have anything to ask, please stick in the question box like Alabi is doing. Wait. I'm gonna stop the recording though. Alabi, are you typing? I said you can ask anything you want. Go for it. I'll wait. Okay, I'm gonna wait for a few minutes. Guys, I'm done. I'm just waiting for questions. So if you don't have any, you can close the session. Oh, are there technical tools that applies only to certain seasons? No. You should just follow your own your existing strategy or your existing setup, dear Romolo. So, for example, okay, guys, something that we haven't seen really today, but in September, September tends to be the worst month for stocks. Okay, so as I said, seasonality refers to medium and long-term trading, not intraday, not 1 hour, 4 hours, etc. Okay, so for example, if you have, for example, my setup in a daily time frame is this one. Okay, I like simple things in the daily chart. I like to have a MACD, an RSI, my Bollingers, and 2 moving average, just that. So sorry, so September started here. Where was it? September started here. Okay, and what I was watching in the beginning of September, it was that DAX over here turned a bit down, and then it started going up. So up. So I don't see any seasonality over here. I was like, okay, I'm keep watching, I'm keep monitoring. However, there was some doubt because I had bullish candles, but momentum, MACD, my RSI were below 50 and were negatively configured. So there was an indication that looked to be just a temporary bounce. So what you have to do is just stick on your existing strategy, okay, on your existing setup. So then I saw this big bearish candle, okay, big bearish candle. That was a very, very first signal that we might have a pullback down, a continuation of this of August decline. So okay, down, doji, down, and a gap down. So here, when I had a technical confirmation that DAX has started already its downtrend. Okay, so you need to combine your knowledge with the technical analysis. If your technical analysis at some point meets the knowledge of seasonality, then you have more confidence to take the decision and enter the market. Okay, but it's good to combine them. Use your existing setup if you have one. Index and futures, I need different okay, index and futures, I need different in this example. I'm still confused about VIX and S&P 500. What is the difference between oh, okay. Okay. So it's a very, very good question. I'm not sure whether people are aware what's the difference between those two. So we have the USA 500. Okay, what is the USA 500? USA 500 is a stock index, right? That measures the performance of 500 large companies listed in United States. So it's think about it like 500 companies merged together, okay, in a single stock. And so how the S&P 500 performs is an indication whether the majority of those 500 companies are performing well or not. Okay, so S&P 500 is just an index, a stock index that presents how well those 500 companies perform. So if it goes up, we know that the majority of them is doing great, is bullish. If it's to go down, we know that the majority of them is in a bearish mode. Now, VIX is something completely different. Okay, so VIX, okay, it means it's a volatility index. Okay, so it's an index that measures the risk, the fear, the stress that there is in the market. Okay, so how I will simplify things for you. So it represents, okay, it represents the strength of the near-term price changes of S&P 500. So we have the S&P 500, as we said, it shows the performance of those 500 companies, okay? Okay. Now, based on the S&P 500, so the VIX is taking the S&P 500 and present to us how strong the changes of S&P 500 is. So it's a symbol of how volatile, how volatile S&P 500 is. Are you with me, Alabi? It's if you ignore the fact that it's calculated based on the S&P 500, you should have in mind that it shows, it's a very good indicator of the sentiment, of whether the market overall, the markets, the people, the majority, the market participants that they are in the market are stressed, are in fear. So it's a very, very good indication to identify whether we are in a risk on or risk off mode in the market. Okay, rather than just solely having our heads that, okay, it is derived by the strength of the price changes of the S&P 500. What is more important about the VIX is that it shows us the level of fear in the market. So there are a lot of people trading VIX, okay, or just solely use VIX to identify whether the stocks will decline or whether the stocks in general, the stock, I'm not referring only to S&P, I'm referring to the US stocks, whether the stocks will fall or whether they will rally. Because if VIX rises, okay, that means fear increases. So that means stocks could fall. If the VIX declines, that means that there is not a lot of fear in the market, so stocks could rise. So yeah, so that was it from me. So look at that. VIX is going to the upside with a nice gap up in the middle of August. Since the middle of August, it's moving up in an uptrend. So if I go take Nasdaq, not S&P 500, let's go Nasdaq and put there. So let me see. The gap up came at the 17th of August. So let's check Nasdaq. Nasdaq since 17th of August. 17th of August. Here we are. Very nice. Bearish candle, evening star formation, which is a bearish pattern, and the downtrend started. Theoretically and over the years, historically, it has been proven that VIX, because it's presenting sentiment, presenting fear, is presenting risk. If it rises, implies that stocks could fall. If it declines, implies that stocks could rise. Are you asking for a book? Alabi, what do you mean any note? To be honest, I cannot think of a book in regards to volatility index, and it's a shame that Stuart is not here. He could advise. But can you send me an email, and I will try to. I will ask Stuart to advise any volatility index book that you can read. I cannot I cannot remember any. Nothing comes up in my mind right now. But yes, send me an email, and I will try to brief you up at webinars@agfm.com. Okay. If someone is using pivot points, what are the indicators to combine with pivot points for trading? And Mecca, near term, so intraday. Can you advise the time frame that you are referring, dear Christopher? Time frame, please. 1 hour and 4 hours. Okay. So, okay, you know my typical 5 and 9 exponential moving average, the one that I'm the setup that I'm using in the 1 hour chart. But so do I have the pivot points in this demo account? Do I have the pivot points? No. Okay, I don't have it, but for 1 hour chart, it's good to. It could be something you could use. It was the stochastic 533 first of all for the 1 hour chart. Okay, Christopher, and the 5 and 9 exponential moving average as well. For the 4 hours ones, though, I don't believe these are relevant. So for the 4 hour, you should stick with default setup, with the default indicators. So what it could combine with pivot points is it will be the fractals. Okay, fractals, and 20 and 50 period moving average, simple ones, but you need to test it a bit. Okay, these are of my favorite ones. That's why I'm referring to these ones, but it doesn't mean that there are not others over there that they could be sufficient for a 4 hour chart. Ichimoku will be good for 4 hour chart as well, but then it will get a bit but then you might don't need the pivot points if you're gonna add Ichimoku. So if you are really keen to keep pivot points, try pivot points with fractals and 20 and 50 period moving average. Whether it will be a simple or exponential, it depends on which asset you are trading. But this looks sufficient. Again, it depends on on the asset. Okay, they might need some modifications. There are a lot that it can be combined. Is what you like, what it does make sense to you, what is sufficient for the asset that you want to trade, okay, what gives you as accurate signals as possible. But yeah, either though pivot points could be just standalone, you know, pivot points can stand alone. You know that, Christopher, right? I mean, they could be used. Any breakout of pivots could be just okay, not standalone. I put up pivots, solely pivot points, plus a momentum indicator, either MACD or RSI or stochastic. It could stand alone. So at the break of a pivot point, if your momentum indicator, so MACD or RSI or stochastic, agrees with the breakout, then you can take an entry. So you don't need a lot of, if you're using pivots, you don't need a lot of indicators, to be honest. If you want to use them alone, so only pivots over here, okay, that's very, very okay. But you will need a momentum indicator at the bottom, that just to make sure that any breakout is not limited, it's not like not a quick reversal will follow. So yeah, this is what again, depends on your asset. So try that. Pivot points only, and at the bottom, one or two momentum indicators. One of the most famous ones, that is stochastic or MACD, is up to you. So if the breakout is in line, if the breakout of your support or your resistance is in line with the momentum, then that's just brilliant. Okay. Try it though, okay? Try a bit. I mean, go back, check, does it give me correct signals? Is it good for my pound or my, I don't know, NASDAQ 4 hour, and etc. before you actually trade it, okay? Always test. So guys, I'm gonna call it a day. Thank you very much. Have a great day ahead. Anything you need, send me an email at webinars@hfm.com and I will reply on spot. Thank you very much. Bye-bye.